The last year had its share of shocks, but India remained resilient. It was the world's fastest growing major economy. Growth remained steady, inflation was a worry for a while, but it's largely been contained, and the year ahead looks good. Let's start with the basic indicators. How are the growth numbers looking for India? Positive. By all indications, India will maintain its growth momentum. I have three projections, in fact, from leading financial institutions: the International Monetary Fund, or the IMF, the Organization for Economic Cooperation and Development, or the OECD, and the World Bank. Now, all three agencies forecast strong growth for India. They say India's growth rate will be above 6%. For the third straight year, India will remain the world's fastest growing major economy, faring way better than most others. And what's driving this growth? Domestic demand, it is high, and foreign investment is rising. FDI, or foreign direct investment in India, rose to a 21-month high. It almost touched $6 billion in October 2023. The stock markets are breaking records. We told you about this last week. 2023 was a banner year for Indian stocks. They crossed the $4 trillion mark, making India a stock market superpower.
Hello friends, recently I've been hearing about Indian economy growing like crazy, and it's getting into multi-trillion dollar economy, and investors from across the globe are very much interested to invest in Indian stock market. This video is for you if you are one of them like me who know very little about stock market and then have some money, let's say in Indian rupees, 10 lakh Indian rupees, 10 lakh or 20 lakh Indian rupees, and we want to invest in Indian stock market. Maybe you are living in US or in India. Listen to this video fully and it might be useful to you. This is not a recommendation for how to invest, but I'm just love to share my knowledge, whatever I have gathered by listening to Mohnish, Pabrai, Charlie Munger, Warren Buffett, who are the great fundamental investors like Benjamin Graham. So after listening to Mohnish Pabrai, I got hooked into this principle, and I'm so hooked that I started digging deeper into this, and I love to share this video with you all. So first step, let's say you have a 20 lakh Indian rupees with you, or let's say some $10,000 with you. You like to invest in Indian equity market. So the first step is to go to Google. Mohnish Pabrai says use Google for investing. Everything is available online. Go to google.com and then type in list of great Indian investors. So this would give you a list of great Indian investors from NSE market or BSE market in India. So once you have this list, copy and paste it in a spreadsheet. Let's say we have 30 investors from this list. So this is step number one. Step number two is take each of these investors, dig deeper and go into their portfolio and get all the list of companies that they have invested in the past or recently, and again put it on a spreadsheet. Let's say you have a 30 investor, each investor has a 10 companies in their list in Indian equities. So 10 into 30, now we have like 300 equity list on the spreadsheet that you prepared in your, now these 300 companies is in your spreadsheet. Now take each of these companies and look at their fundamentals like price to earnings, market growth, sales growth, revenue growth, return on equity, return on invested capital. So look at them. If something that makes you comfortable so that you can look more into that, take those companies, shortlist those companies out of the investors, each investor's list of companies. So now out of 30 investors, let's say you get 2 or 3 companies from each of the investors. So 30 multiplied with 3, now you have 90 companies or 60 companies in your radar, which is filtered. Okay, once you have this list, now you can dig deeper why each of these individual investors, if they have invested recently in the last quarter, if the volume has raised, the stock volume has raised, that means you know that they have increased their uh, investment in this particular asset, or if they have invested in the past and it's still there or not. So now we know the pattern, and now go dig deeper into the company, how the fundamentals look, book value looks, what are the management, how the management looks. So based on the Charlie Munger's, Warren Buffett, Mohnish Pabrai's 4 rules of investment philosophy, in my videos, there are 4 rules, right? So now you have the list of the companies that you can dig more deep into. So out of the 60 or the 40 companies that we have right now, 30 or 60 something that came, right? So now go in all of them and see if anything that catches your comfortability zone, and you feel like, okay, you understand this business, and then start focusing on that. Okay, this is the step number 3, I think so. So now you have 20 lakh in your bank account. Step number 4 is invest some money, right? Do you think you can invest everything there at a time? So what I would do, again, it's not a recommendation. What I did is, now, yesterday, after hearing the news from the Fed chairman Jerome Powell that interest rate did not rise because of the inflation in US market. So now suddenly, even in Indian, I see Indian markets are like going up, and it's already at a high level right now. P multiples are very high in Indian equities, and mainly the reason I think is promoter holdings are very high in India and their interest is very high. So usually in Indian stock market, the P multiple is usually high. So what do you do now? I have money. Can I invest now? I know there is a lot of growth potential in Indian market. I want to invest, but is it the right time? That is the question. So what I did is, out of those selected 30-40 companies, and then I shortlisted to 5 or 10 companies, and I took one company. Let's say, for example, I got interested in Infosys. So now the Infosys price yesterday or today is like around 1,557 or something, and at its peak it is 1,800 something, and now it's back to 1,500. So can I go ahead and invest all my money there? No. What I did is, I bought like 10 or 20 shares of Infosys stock. So once I have that in my portfolio, now I get interest to study more on the company, right? Now you start reading the annual letters, 10Ks, start attending the latest earnings call. So now because you have already invested some money there, now you really get more interest to study more, and till you feel like confident and comfortable yourself. Not that because Mohnish Pabrai invested there, not that because some other investor invested there, but because now you understand this company very concretely, and now you are ready to invest. So once the market is giving you a fair price, wait for that. And now, because you already invested a very small amount of money there, and if the market goes up, you don't need to worry. But if it comes down and reaches a fair level, so that you do a bulk invest into the company. So this is the step number 4. I think so. This is the step 4. Okay, this is the only way of doing this. There are another way also. What I did is join some blogs in India. There are so many YouTube bloggers from India. They talk about Indian small cap, mid cap, and large cap companies. They do many, like a lot of analysis, dig deeper into that. Listen to them. Just listen to everything what they say, and take some points, and then you do your own research, and then you can invest if you want to. Again, our motive is not to rush. We are long time investors. Like, we want to think like what Mohnish, Pabrai, Charlie Munger, Warren Buffett thinks, like a long term investors. We want to catch a ship, a company. You should think like a ship, which is a good ship, strong, sturdy ship. Once you get in, you are able to sail the ocean for the lifetime of the company. You don't want to go down with the ship. That's all our point. Again, as Warren Buffett says, don't lose money. Rule number 1 is don't lose money, and the rule number 2 is don't forget rule number 1. So these are the kind of different strategies that I learned. This is not again financial advice from my side. I'm just sharing my insights that I learned and I'm using right now to invest in the stock market. If you do your analysis, you study, you understand, once you feel confident, then you go ahead and invest. Take these, whatever I am giving information here, as a first step, and dig deeper and deeper and understand better, and then invest. Thank you.